Kroger stock, ticker symbol KR. This stock is up 2% year to date, which is quite interesting since it has gone up and down quite a lot this year. Kroger stock has a 52-week high of $62, which dates back to April, and a 52-week low of $40. Kroger is loved among the investor because of the dividends. Dividend yield is sitting at 2.2%, which is pretty decent, and payout ratio is really low. So I get why people love the dividends. But does this also mean that Kroger stock is a buy? Well, in this video I'm going to show you real quickly what Kroger does. The most recent earnings, the historical returns, the fundamental analysis, dividends, and in the last part I'm giving you my price target to see if they are a buy or not. And I think you definitely want to see that part, so make sure to watch until the end. And I'm also very excited to see what you guys think about this stock, so please let me know your thoughts in the comments. My name is Thomas and this is Thomas Invest. I'm an investor looking for great stocks at great prices. So, what does Kroger do? Kroger is the leading American grocer with more than 2,700 supermarkets operating under several banners throughout the country. One of the things that I really like about Kroger is the focus on own brands that have higher margins in general. Kroger did beat earnings on EPS and revenue, which is pretty impressive seeing the circumstances that we are in. Another interesting thing is that analysts are expecting good results in the next quarter. 12 upvotes and only 2 downvotes, while at most companies it's the other way around. If we dive in the earnings report and check the key results, we see that identical sales is up 5.8%, and this is without fuel. Digital sales is up 8%, and growth in FIFO, adjusted operating profit, is up 17%, which is quite impressive. EPS is up 13%, which is also very nice. What I really like is that Kroger is focusing on increasing the margins. There are 3 major focusing points. Productivity improvements, where they are on track to achieve annual cost savings of $1 billion. Improving product mix, where they are going to expand their own brand portfolio. And last but not least, growing alternative profits, such as digital sales growth. Another great thing is that Kroger updated full-year guidance where they expect to increase the ID revenue to 4% to 4.5% versus 2.5 to 3.5 previous guidance. An increase in EPS as well, and of course in operating profit also an increase, so this looks really good to me. Free cash flow is also expected to increase a decent amount, so it comforts me a lot that they raises the full-year guidance. And overall this looks pretty good to me. Next up are the fundamentals of this stock. But first, if you made it this far into the video, I want to thank you a lot for watching this video. Make sure to subscribe and in return you receive similar analysis to this one every week. Let's continue by diving into the fundamentals. Kroger is a 33 billion market cap company and has a PE ratio of 11.9, so let's call it 12. The 5-year PE ratio is at 16, so it has come down quite a lot. This could also mean that Kroger could be undervalued based on the PE ratio. Later in this video I will show you my 3 price targets for Kroger, so make sure to watch until the end. Revenue is at 158 billion, which is of course an insane amount of money. And in this graph we see that revenue went up pretty nice and steady. And of course, since the lockdown period it got a small boost. So this is something to keep in mind. Revenue will slow down sooner or later. Net income is at 2.79 billion. Which gives us a profit margin of only 1.8%. And this is of course very low, but keep in mind that this is very typical for these type of companies. It's not about high margins, it's about big volumes. So I don't worry that much about this profit margin. The good part is that the current profit margin is higher than the 5-year average of 1.5%. And earlier in the earnings report we saw that margins are expected to increase since own brands and digital sales are growing. EPS is going up and down quite a lot in the past couple of years, so that's something that I don't like that much. I prefer a bit more steadier and consistent pattern here. Price to sales ratio is very low, which is of course very typical for these industries. So this looks pretty good to me. Price to book ratio is a bit at the high side in my opinion, so that's something that I don't like that much, especially since it has increased quite a lot in the past couple of years. Price to free cash flow is looking really good. You want this number below 20 in general, but it can be very different because of the industry or type of company, of course. To me, below 15 is probably the most reasonable for a company like Kroger, since it's a slow-growing company. Analysts expect a low single-digit growth in EPS, which is kinda disappointing to me. And the revenue estimates are also a bit disappointing, so this is something we have to keep in mind when creating the low, mid and high price targets at the end of this video. Return on assets is sitting at 5%, which is pretty decent for a company like Kroger. Return on equity is at 29% and looks all good to me. And the most important number here, return on invested capital, is at 6%, which is a little bit too low in my opinion. Especially since the 5-year average is at 7.7%, so this is something to keep your eye on. Current ratio is at only 0.72, so this is something that I really like, of course. You want this number below 1.5. And for these type of companies, this is very important, so this satisfies me a lot. A thing that I don't like is the debt to cash ratio. Right now, total cash is sitting at 1.1 billion, and cash flow is roughly at 5 billion. To me, it's very important that a company can pay down at least 33% of the total debt. Right now, Kroger is not able to pay down a big chunk of their total debt, so keep an eye on this number. But on the other hand, companies like Kroger tend to have higher debts in general, so it doesn't worry me that much. Especially since free cash flow is growing a lot in the past couple of years. It's not very consistent and steady, but it's growing. The big spike we see here is related to the lockdown periods, so it's expected that free cash flow growth will slow down a bit. Another thing that I really like are the shares outstanding. It's decreasing a lot in the past couple of years, which is a good thing. This increases your ownership in the company, increases the EPS as well, lowers the PE ratio in the end, and very important for Kroger and a lot of investors, it also makes it easier to maintain and increase the dividends. And since we're talking about dividends anyway, dividend yield sits at 2.24%, which is pretty decent. Kroger pays an annual dividend of $1.04 a share with a payout ratio of only 22%, which is very low, and something that I really like. It means that there's roughly 78% left in cash to pay down debt, buy back shares, do acquisitions and all other things. The 5-year growth rate is at almost 13%, which is also very nice. On top of that, they grew the dividends for 15 years in a row, which is very impressive. Overall, this dividend scorecard looks very good to me. Next up are the historical returns of Kroger. I decided to include the S&P 500 as a benchmark, since this is one of the easiest ways to invest. Just buy an S&P 500 ETF and wait. I also included Albertson, ticker symbol ACI, Walmart and Target. On the 5-year chart we see a 141% return for Kroger including dividends. And they easily have beaten the S&P 500. And it's pretty much the same story for all other stocks in this list. Target had the highest return with 204%. On the 1-year chart we see some interesting things happening. Only Kroger had a positive return with almost 9%. All other stocks has a negative return and the S&P 500 returned minus 18%. On the 6-month chart we see a minus 16% return for Kroger versus minus 11% return for the S&P 500. Target returns the least with minus 32%. On the 1-month chart we see that Kroger returned almost 4% versus the S&P 500 being nearly flat. Albertson returned the most with 12%. So overall, Kroger did very well and has beaten the S&P 500 in most cases. But does this mean that Kroger stock is still a buy? Well, let's check the 3 price targets that I created using the Everything Money software, which is one of the best tools out there. I'm using a low, mid and high assumption to get the 3 price targets, starting off with revenue growth. For the revenue growth, I expect things to slow down a little bit according to what we see in the revenue growth historically, but also based on the analysis. So I fill in 1% for the low assumption, 2.5% for the mid assumption and 4% for the high assumption. Profit margin is increasing and expect to increase even more from here. For the low assumption I'm filling in 1.4%, for the mid assumption 1.7% and for the high assumption 2%. Free cash flow margin is pretty much the same story with 1.3, 1.6 and 1.9%. PE ratio is at almost 12 right now, but to me 14, 15 and 16 are the most justified numbers here, and it's the same story with the price to free cash flow. Kroger is a slow growing company, so you don't want to overpay for this growth. My desired annual return is 12.5%, since I can get an easy 10% average annual return with owning an ETF. Right now, Kroger is at $46.5 a share. I hit analyze, and we see a lot of green numbers. We have low price targets of $30 to $32 a share, which is a big drop from here. We have a mid-price target of $42 to $45, which is around the current stock price, and we have a high price target of $57 to $60. To me, the mid to high price target is the most justified here, so that could mean that Kroger is undervalued based on these assumptions. I did own Kroger stock back in the days. I bought around 35 to 38 and sold around 55. And to be honest, I think I would go for the same scenario again. So for now, I do think they are undervalued, but I would like to see the stock price coming down to roughly $35 to $40 to build in a bigger margin of safety. I really like the stock because of the fundamentals and dividends. For me, it's just waiting for the stock price to come down, and when it does, I'm going to buy the stock for sure. But remember to always do your own research and never fully trust on what I or other YouTubers say about the stock. I'm not a financial advisor and this content is just for entertaining purposes only. I hope you liked this video and I did bring some insights of the company to you. I'd really appreciate a thumbs up and make sure to subscribe to get notified when I'm posting a new video. Thanks for watching and I will see you in my next video.